Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover the rise in sectors and the exception of Bitcoin, the record high home prices and future price predictions, the potential impact of streaming bundles on Disney and Netflix in 2024, strategies to ease the burden of student loans, and Benjamin Graham's advice on buying stocks.
In October, the housing market in the U.S. saw a continued increase in prices, reaching a new record high. This signifies the 9th consecutive month of price hikes. Comparing October 2023 to the same month in 2022, prices rose by 8%. This is a significant jump from the 4% increase observed in September and marks the strongest annual gain witnessed so far in 2023. Interestingly, this growth is also the most robust national growth rate seen since 2022. A surprising aspect of this surge is that it occurred despite the prevailing high mortgage rates in October. The main driving factor behind rising prices is the low inventory of available homes. With fewer options on the market, potential buyers who were capable of handling higher mortgage rates or those who could pay in cash found themselves competing for the limited homes available. Additionally, many buyers have been motivated by the fear that if they don't make a purchase now, interest rates may increase even further, causing prices to rise even higher. Taking a closer look at some specific regions, Detroit reported the largest year-over-year gain at 1%, followed by San Diego with a 2% increase, and then New York with a 1% gain. The only city that experienced a decline was Portland, Oregon, which saw a decrease of 6% compared to 1 year ago. Looking ahead, experts hold differing opinions. Some anticipate that prices will continue to rise in 2024 due to increased demand, while others predict a small decline as inventory improves. Now let's shift our focus to some global highlights. First, Intel has announced plans to construct a $25 billion chip factory in Israel. This is said to be the country's largest investment ever, which is an impressive feat. On another note, Taylor Swift has had an exceptional year as a business leader, standing out among her peers. Her achievements make this year one for the books for her. Lastly, Apple has filed an appeal following the Biden administration's decision to permit a U.S. ban on watch imports. It will be interesting to see how this situation unfolds and whether any resolutions are reached. Good news for U.S. stocks as they continued to gain momentum yesterday, marking the 8th consecutive week of growth. It seems that the market is on a roll, with the S&P just 22 points away from reaching its all-time high set in January 2022. As we approach the end of December, it's important to start thinking about what industries to keep an eye on in the coming year. According to experts, 2024 could be the year of the streaming bundle, which could have an impact on major players like Disney and Netflix. Additionally, it's worth paying attention to vehicle stocks, as significant changes are expected. Next year, there is expected to be an increase in demand for e-vehicles, making it a good time to consider investing in companies like GM, Tesla, and NIO. However, the decision can be a bit tricky because many companies are not only working on new products, but also planning to enter new markets, which could change the dynamics in 2024. For instance, Japan is investing a whopping $3 billion in Thailand over the next 5 years to support its carbon neutrality goals. Additionally, we may witness major price changes with more affordable options hitting the market. The pharma industry could also bring some surprises in the upcoming year. We've already seen significant buyouts and mergers this year, including AstraZeneca's recent acquisition of China-based cell therapy biotech company Gracell for $2 billion. Lastly, it's worth keeping an eye on the chip industry, with companies like Intel and Nvidia in the spotlight. It's also crucial to pay attention to companies that have strong links to China, as the geopolitical situation could potentially impact the industry. And as a final reminder, retailers are gradually doing away with their free return policies, so it's important to keep that in mind when making purchases. Moreover, this might impact profits in stocks. Are you struggling to get rid of your student loans? You're not alone. Many people are finding it difficult to make loan payments, especially after a 3-year gap. In fact, only about 60% of those with student loans had paid by mid-November. The situation is quite serious, as outstanding education debt amounts to a staggering $7 trillion. This surpasses both credit card debt and auto debt, with the average loan balance sitting at $30,000. Shockingly, around 7% of student loan borrowers owe more than $100,000. But don't worry, the government is taking steps to help. They have introduced a 12-month on-ramp to repayment, which shields borrowers from the worst consequences of falling behind. However, there are additional options you can explore. One option is deferment, which can save you money by not accruing interest and make your life easier. There are various types of deferments, such as unemployment deferment and economic hardship deferment. Each has specific requirements, like receiving certain types of federal or state aid for hardship deferment. There are deferments available for graduate fellowships, military service, post-active duty, and even cancer treatment. Keep in mind that the maximum benefit from an unemployment or hardship deferment is only 3 years per type. If deferment is not available to you, consider forbearance. This allows you to put your loans on hold for up to 3 years. However, be aware that this option can be costly due to accrued interest. It's recommended to try and make interest payments during the pause to prevent your debt from increasing. Another alternative is income-driven repayment plans. These plans limit your monthly payments based on your discretionary income and offer forgiveness for any outstanding debt after 20 or 25 years. Recently introduced by the Biden administration, this option allows borrowers to contribute only 5% of their discretionary income toward their undergraduate student loans, with some even having a monthly bill as low as $0. So, I came across this interesting quote today, and I thought I'd share it with you. Benjamin Graham, who is considered to be the father of value investing, said, "If you are shopping for common stocks, choose them the way you would buy groceries, not the way you would buy perfume." It's a simple yet powerful analogy that really got me thinking. What Graham is basically saying is that when it comes to investing in stocks, we should approach it with a practical mindset, just like we do when buying our everyday essentials like groceries. We carefully evaluate the quality, price, and value of the products we buy at the supermarket, right? We don't get lured by fancy packaging or brand names alone. It's the same concept that should apply to investing. Often people get caught up in the hype and glamour of the stock market. They get tempted by flashy ads or the lure of quick profits. But Graham's advice is to avoid that mindset. Instead, focus on the fundamentals, do your research, and make sound investment decisions based on the company's financials and long-term potential. It's a reminder to approach investing with a level head and to always think about the underlying value of the stocks you choose. So next time you're making investment decisions, remember Graham's simple analogy and think of buying stocks like buying groceries, not perfume.
Today, we discussed topics ranging from the performance of different sectors, rising home prices and the future of the housing market, the potential impact of streaming bundles on Disney and Netflix, strategies for managing student loan debt, and the timeless wisdom of Benjamin Graham's approach to investing in stocks. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.